Morning, Steve Frady in Chicago with the morning grain comments. Well, it's Friday the 13th, so I'm just kind of watching myself pretty closely today. It's also the National Blame Someone Else Day. So it happened a long time ago on Friday the 13th when somebody's alarm clock didn't go off, so she just decided to blame everyone else for her problems that day. So it's National Blame Someone Else Day. Kind of appropriate nowadays, isn't it? As far as the grains overnight, beans are up, corn's unchanged, and wheat's down. We got three basic fundamentals that we're working with. In the beans, it seems like the funds keep adding to the long position because of the record demand for beans and meal and the aftermath of the Argentina drought. The one problem the market's having is that right now inside China there's a record amount of soybean meal stocks. Crushing plants are beginning to shut down because they have too much meal inventory, and there's a large amount of Brazil beans on the water heading for China. So China's sales could slow despite the fact yesterday's U.S. soybean export sales were a bigger number than expected. So we're kind of having trouble at this 1060 area justifying prices going much higher, and it feels like prices should go lower, at least for the beans. Corn is stuck in a trading range. We've got too much supply from last year to move prices higher, and we've got too much demand for prices to move lower. And the wheat market's been down this week because it looks like in the 8 to 10 day time frame, Kansas is finally going to get a good soaking rain, and that's going to help the hard red winter wheat crop. The second thing is weather, and looks like in the United States the next 2 weeks the Midwest is going to be wet and cold, and that's going to slow plantings. But on the other side of the coin, as I mentioned, it's going to get rains for the southern plains, which should be helpful. One thing is most of the meteorologists say that in May the weather's going to change, and it's going to get better so we can get the crops planted and the summer's going to be fine. So we have to kind of wonder how much more premium the markets need to put in because of weather. And then finally is just kind of the overall supply and demand picture. As we get into the May 10th report, we should see for 18 and 19 the possibility of lower corn stocks next year because of lower supply. We'll see what they do as far as beans are concerned, because it's really a hard S&D for them to put together, because bean acres should be up. Maybe demand is up, but we still have to deal with all these tariff issues. The latest thing is from Washington is that the Chinese and U.S. are not talking about a key factor of all of this discussion, which means eventually these tariffs will be imposed. And then finally, from a wheat perspective, we note that January, February, and March, the Russians shipped a record amount of wheat out of their ports, and they upped another 1 million tons of their export capacity and outlook for this year from the USDA's number. So without a weather problem in the United States, even though wheat prices are lower, the big Russian supplies offers resistance to any wheat rally. As always, these are my thoughts and not those of ADM or ADM Investor Services, and have a safe and profitable trading day.